Hey everyone, welcome to another video. So today we're going to cover more market structure. This is going to go over external structure, internal structure. I'm going to show you the cheat sheet that I just developed myself, and then I'm going to go into some application. This might be a video that might be already too simple for you, and if it's too simple for you and you already know this stuff, maybe you don't need to watch this video. But after making my last market structure video, I had a lot of questions. And one of the most common ones is people not understanding which leg of price we were currently in. Whether we're currently in a swing structure or we're currently, in a corrective pullback leg, what's going on. And so a lot of people really didn't understand when I was talking about point of interest, whether they're like, is this taking external liquidity or is this internal liquidity? So I'm going to simplify it a lot in this video. Now, if you haven't watched my first market structure video, it's a really good one. I got some amazing feedback on it. I recommend you watch that one no matter what level you're currently in. There's a lot of tips. Now, the cheat sheet for that video is available here in my Discord group. I had a lot of people ask me to make a group, so I made one. This is my Discord. There's about 50 members in it. I have a lot of cool stuff in there, and I'm going to be providing free coaching in the future. My Discord is forever free. I just want to help out. So if you want to join it, go ahead and join it. Links in the description. Same with this cheat sheet. If you decide it's good enough for you to save it and maybe it'll help you, go ahead and download it, save it to your chart. It'll be a link just like this. You can copy the link and you can double click it, hold it, and then save it to your computer, your phone, whatever you want to do it for your files, right? So let's get into this video now. So external structure versus internal structure. So the idea behind this video, we have two sides here. On the left side, I'm really trying to, make this so simple that anyone can understand it no matter what level you are in. This might be beginner level stuff, right? On the right side, I'm going to show over more of how we apply all of this and how powerful it can be. Now, there's a lot of tips on here, a lot of things that might really help you. If you don't already understand this, this is a great video to start with, right? So let's get into it. By the way, I know I talk slow. If you want, watch my videos in 1.5 times speed. Even I watch my own videos in 1.5 times speed. So, let me know what you thought. So let's get into it. So on the left side, we have a couple examples here. So we have bearish order flow, bearish market structure. We have bullish market structure on the right here, right? And then what we basically have below, this is a refined zone or an expanded zone of just one of these areas. And the reason why is because, it's a little bit bigger here, might be more clear for you to see. This video is recorded in 4K. It might just take a while to, get to that level after I upload it. So, enjoy. Hopefully it's clear for you guys. So one thing that I wanted to mention here, if we start at the top left, is swings. Let's talk about swings and pullbacks, external structure versus internal structure. External structure is external structure is always referring to swing structure because swing structure leaves behind external range liquidity, right? The same way as a corrective pullback, right? Which is, price pulling back before a continuation of the higher time frame. That one's always going to leave behind internal range liquidity. And so when we take out levels in this internal range, that's what we consider internal structure, right? Minor structure, substructures below. It's kind of the same stuff, right? So I'm trying to make it as simple as possible, right? So one thing to keep in mind if we're comparing swings and pullbacks and, just to keep it simple here, swing structure is going to do what? It's going to take external range liquidity. It's going to form the extremes. It's going to result in breaks of structure, and it is the higher time frame trend. You might get reversals when you have a swing break structure, in an opposite direction, but it is the higher time frame trend. A pullback is not going to break structure, not external range structure, right? All of the purpose behind pullbacks is to continue to build more liquidity. So it's very corrective. Manufactured liquidity refers to when we build structure that is mitigating every single level. So when you see price is very corrective like this, let's say here, and I know this isn't a perfect example. I'm going to show you the application soon, right? In the, toward the end of the video. But when we continue to mitigate, let's say every demand in this area here, what we basically have is we've created no resistance. So all we have is a ton of relatively equal lows in this case, or a ton of relatively equal highs, or trend line liquidity in this case, right? We're leaving tons of trend line liquidity because, and we don't trade trend lines necessarily, but we understand what they are for most retail traders, right? So when we see something like that forming, what we know is if we don't have any unmitigated levels, there simply will not be any resistance because we've tapped into every previous level that broke structure internally, right? In that case, there's no reason for us to get a strong reaction. And so we usually liquidate all of those levels. And so the idea behind this is it's important to understand what part of the structure we are in, whether we're forming swings or whether we are currently in a pullback, right? Whether we just took external range liquidity or we just took internal range liquidity, because wherever you are in the leg, if let's say you're actually trading right now, and this is what the bearish leg looks like. Well, if we are here and we just took a sell, let's just say, and we broke the most recent structure, the lower low, right? Because the expectation is what? That we make new lows and we make lower highs, right? Because if we're bearish, we should not breach the highs. Those are protected because those are used to break structure downside, right? Basically what? That means that buyers are weak, so we continue to seek lower pricing, right? Sellers are strong. So once we break structure to the downside, once we break swing structure, right, and we take external range liquidity, right, what that usually means is we can expect a pullback. So if you're currently trading short on a bearish structure and we just took external range liquidity or external swing structure, we just took out a previous lower low, what that tells you is it might be a good time to pull your profits, to take profit, right, because more than likely, we can now begin to expect a pullback. Now, we'll see indications of when we get a pullback. There'll be a lot of signs we'll get a change of character. We see price shifting, momentum is now shifting, and you can see that now impulses are now favoring, let's say, the opposing side, right, in that case. And so those will be signs to not what? To not give away your profits, right? Because if you're taking short, you would love to take profit at the lowest price or at the best price you possibly can, right? And at the same time, it could also present you with the opportunity to take a counter trend trade. Let's say if we were currently higher time frame in a bearish order flow, creating bearish market structure, maybe you would take a buy to the most recent valid supply that's unmitigated, because maybe that's where we will get a continuation from. So it will allow you to trade both sides of the market and, play both sides, whether you're pro trend or counter trend, a lot safer, right? Just by understanding what we can expect, right? So on the left side, when external structure is bearish, that means that the shorts are going to be impulsive and pullbacks are going to be corrective. The swing to the downside, impulsive. The pullback, very corrective, manufactured liquidity, leaves a lot of equal lows. It's going to basically mitigate most of the lows here, because what we're doing is we're just going to use that as liquidity to take price even lower, right? So when we refer to, let's say on the bullish side, external structure is bullish. That means that longs are going to be impulsive and the pullbacks are going to be very corrective. Now, when we see, let's say, for example, bullish price action, the liquidity, let's say trendline liquidity or equal highs, what we're going to be seeking is to take price higher when we're going bullish, right? So that means that most of the liquidity is going to be on the upper side, right? The trendline liquidity is going to be on the top. As we are corrective pullback going lower, we can expect once we tap into a valid unmitigated demand or enough volume enters the market to shift price back into continuation, that we will sweep and take out all of those areas that we were currently using to push price lower, right? And the impulse will be very bullish, right? Once we take out the swing high, the higher high, right? And we have this higher low. Once we take out the higher high, the expectation is what? We get a pullback once again. So that will tell you, take profits, right? Or be prepared, because if we get change in characters and shifts in momentum and volume, and now we see impulsive let's say push more like aggressively in a corrective nature, now we could probably say it's good to take your profit or take a counter trend trade to the next nearest demand, right? So one thing that might be easy to identify, and this graph exactly will show you that, external structure or swing structure is always going to be on the left. Your internal structure is always going to be on the right side. So while this might not look exactly like price, it's going to be the same way. It's going to be treated this exact same way. So if you look and currently price is, let's say, bearish, the swing structure is always going to be the stronger leg, impulsive leg to the downside, right? And the expectation is because we're bearish, the lows are going to continue to go. So what you're going to use is, let's say, the lower low, right? And once you see that price is being corrective, building price back up higher, what you are anticipating is once we come in to tap a higher time frame supply on the left that is on the swing structure, right? And we get a change of character, you can bet that now we are going to be in continuation, and the continuation is going to be much stronger. And now what we are forming is a new swing, right? So from this high to this low, this is a swing structure, right? Once we break the low, which is we take out the previous lower low, which is external swing structure, right? Now the expectation is what? Corrective pullback. This is what we get here, corrective pullback. We come back up into a what? Higher time frame supply. Once we tap it, right, on the left, what do we get? A shift in order flow, and now we are now developing a new swing structure. So the swing structure is always going to be the leg on the left, always, right? I'm going to show you exactly what I mean by that. So this is the left. Now you can see that this is the right. So the internal structure is going to be on the inside, right? But the swing structure is always the leg of the left, even when you're bullish, right? So if we're bullish, what are we doing? Swings to the upside, corrective pullback down, continuation high. The swing is always going to what? Take external liquidity, it's going to form extremes, and it results in break of structure. This is a break of structure when we take that high, right? So swing is going to be on the left side. This is what it's going to look like. And the corrective pullback is going to be bearish, like this. And once we tap, let's say, a higher time frame unmitigated demand, what we're going to see is a shift in volume and momentum that now favors the continuation of the higher time frame, and now is going to form a new swing structure. And the same thing, once we create this swing, right, now we get what? The swing is on the left side, and now on the right side we have the corrective pullback. So hopefully that helps. Really quickly, I guess I should show you what I mean, is if we took swing structure, what broke structure here? So let's just say this was the low, right? And this high broke this low. So if we wanted to keep it simple, that's the high extreme, this is the low extreme. The expectation is what? If we're bearish, the low is going to go. So we're going to take the extreme low that we formed and wait till this breaks, right? And so now, because this, from this high to this low, this is basically the swing structure. It's to the left. So now the internal liquidity, internal range liquidity, is anything in here that we're taking. So for example, this high created a new low. So this is a pullback, right? This is internal, right? This one, let's say here, price pauses and continues to the downside. This is internal liquidity, right? This here, let's say this level here, price makes a low, pulls back a little bit, continues to the downside. Not necessarily the nicest levels, right? But I'm just trying to give you an example. This is internal range liquidity, because external range liquidity is only going to be found at the extremes once we break those, right? So the high and the low. And so if this is the most recent low, right, this is the swing low, then what this forms here, this is the corrective pullback. Let me use the other tool here. This is the corrective pullback that simply wants to take price higher for better pricing. And once it taps to an unmitigated supply, we get continuation. And the expectation is what? That we take out the low. You can see we swept the low. So now what does that tell us? Maybe that means that this is now the new high, right? This is a new swing, right? This is the high, this is the low, right? And so now, what do we have? This is a swing structure, right? And if we remember, we look back at our chart, it's always on the left, right? We're bearish, what are we doing? Swing structure, lower low, corrective pullback, lower high, lower low. So let's go back here. So this is what? Lower high, it's lower than this high. We make, let's say, a lower low. If the wick was a body candle closure, that would be more clean, right? But let's just say this was a lower low, right? This is now a corrective pullback. So the expectation is what? That we do not breach the high and that we do not breach this new low, right? Which one is going to be taken? If we're bearish, the expectation is what? Well, that we should protect the high and that we should take the low, right? But until one of those breaches, everything that's happening inside is just internal range liquidity, right? Internal liquidity here, we have internal range liquidity here, right? All of these are internal. The external is only going to be the extremes. And so hopefully that makes sense. It's always going to be on the left, whether it's bearish or it's bullish. This is exactly what it is, right? Hopefully that makes it a little bit more simple. I'm going to show you more clear application in a minute. Let's now look to the right side of the screen. This is going to be more in depth of what I'm talking about. And this is going to be what I think is actually really going to help you guys. So now if we look, what we can see here is we are talking about an actual example. And here the higher time frame, if you see at the top, higher time frame external swing structure. Let's say we're using the 4 hour. The 4 hour is bearish, right? That means that what? We're making lower lows and lower highs. Lower lows, lower highs, lower low, right? So we are breaking structure, and our external structure that we're taking out is going to be the swing low. The swing low is constantly going to be breached, and we will not come up to break any swing highs because we're bearish, right? And remember, the swing is the one that breaks structure, right? So as you can see here, I've labeled swing. This one broke structure. This is a corrective pullback. It doesn't take external structure, but it'll take internal structure. So if you look at, let's say, the darker color or the more straight lines, that's going to be what the 4 hour looks like. If we looked at the 15-minute price action, this is what these smaller time frame lines are going to look like. This is what price will look like on the 15-minute, right? It's a little bit more, you can kind of see a little more action there. It's less clean. Same thing if we looked at the actual chart here. Look at this. So we have this high, right? This is the low. This is very straightforward, right? Pretty clear. Now if we look at the 15-minute, let's look at that same level here. Where are we at? Here we are. Now we have, this is the high and this is the low. So now, instead of seeing very clean price, you can see all of these pullbacks, right? And 15-minute structure is a little bit, more, shows a little bit more action than we would see with the 4 hours. So here you can see that 15-minute becomes bullish for some time, and then we break structure to downside. Take a structure we take the high, we take the low, we take the high, we take the low. It can be a little bit more choppy, a little bit more noisy, right? We have to really understand what price is doing. Very easy to get taken out of trades when you see price like this, right? And once again, look at the 4 hour. Beautiful, right? If we traded just the 4 hour, it would be so clean, right? We wouldn't get all that mess. So what I'm trying to do is clarify that, right? So let's just say here, the highest probability and profitable trades. If you wanted to have the highest probability win rate and the highest profitability trades, and you've heard this a million times, it's to trade pro trend. So what does that mean? Pro trend really defines as when the higher time frame is in alignment with medium and lower time frame market structure, right? So an example of this is if the higher time frame is bullish and medium time frame is bullish and lower time frame is bullish, that is everything in alignment. That's clear pro trend. There should be no resistance, right? That's a clean and clear bullish order flow. Now, let's say another example for bearish. If the higher time frame is bearish, the medium time frame is bearish, and the lower time frame is bearish. Super high probable, super high profitability trades, because that's what happens in a swing. In order for this 4-hour structure to break and take external range liquidity to the downside and continue the swing structure, that means that the 4-hour has to be bearish. That means that the 15-minute has to be bearish, and it's even more clean when you take an entry on a 1-minute to 5-minute time frame, let's say bearish order flow, because what you're basically getting is the extreme of that lower time frame swing, right? Which, and if you take a trade, let's say bearish, let's say on the 4-hour, and it looks like you took a short from here, on the 4-hour, maybe it doesn't look so clean, but if you're on the 15-minute, it might have been where you had a shift in order flow from the lower time frame. Let's say the lower time frame was counter to the medium time frame, and let's say the higher time frame. You could catch when the lower time frame shifts in alignment with the medium, and then the medium time frame could shift in alignment with the higher time frame. So those are always going to be the cleanest trades. A tip that I use is higher time frame for me is daily and 4-hour. Medium time frame for me is always going to be 15-minute, and lower time frame for me is 1-minute to 5-minute, right? And so for me, let's say, for example, to specify what I use them for, the daily and the 4-hour are great for higher time frame structure. That's the structure I use as a higher time frame. I use the 15-minute, and the 15-minute is great for medium time frame structure and even for execution. I sometimes take trades based off of 15-minute levels, but more than often, I like to refine them. And so my execution timeframes are going to be sub 1 minute or 1-minute to 5-minute, right? So you can take trades on 4-hour and 15 minutes, but it's always going to be a little bit better if you just refine those levels, right? Now, a counter trend trade is going to be defined as what? A higher time frame that is not in alignment with the medium time frame. In this case, the lower time frame is less relevant because while the 1-minute and 5-minute, can be tradable, they're more than likely, whatever they're doing, they're counter to the higher time frame and the medium time frame. So those are not in alignment. So you can ignore really what the lower time frame is doing if the medium and the higher time frame are not in alignment, right? So the example here would be the higher time frame is bullish and the medium time frame and lower time frame, whatever, is bearish, right? So higher time frame bullish, medium time frame bearish, those are the opposite. Lower time frame doesn't matter what it is. It could be doing anything, right? The higher time frame, if it's bearish and the medium time frame is bullish, once again, that's the opposite. Doesn't matter what the lower time frame is doing. Those are going to be counter trend trades. Now you can take counter trend trades. I'm going to show you how clean they can look, right? In this example here, right? But that's the idea behind it. So if we looked at this, let's say this example that I've created here, the swing structure, the break structure, the downside, takes external range liquidity, the lower low, and forms a new lower low, gets a lower high. This is the pullback. This basically is another swing leg, a very strong break of structure. This one's high momentum, whatever, right? This is swing low. We have a corrective pullback. So on the 4-hour, look at this 4-hour corrective pullback is what? This is counter trend, right? But on the 15-minute, this is a pro-trend 15-minute bullish order flow, right? So the question is, well, which one are we following? Are we following the 4-hour or are we following the 15? Well, it really matters what exactly you're trying to achieve here, right? Because a counter trend corrective pullback can also provide very clean entries because it's manufactured liquidity. A lot of times the entries are going to be extremely predictable. And so you can catch very good trades, right? Several opportunities counter trend to ride until you get to what? A higher time frame supply. And once you get what? Confirmation, right, of a shift in order flow, then maybe that's when you now trade in continuation, right? So in this case, the 4-hour is what? Is bearish. In this example, in this area that we've highlighted here, that we've circled, the medium time frame is what? This is the 15-minute time frame, as I mentioned. The medium time frame, external swing structure, is bullish, right? The 15-minute structure is counter trend to the 4-hour, as the 4-hour is bearish. So we know if we wanted to take a let's say pro trend trade, we would like to wait for the 4-hour that's bearish. We would like to make sure that the 15-minute becomes bearish as well. That's going to be a very good trade. But if we were going to trade counter time frame or counter trend, then we would know that we were riding to the next nearest supply, right? Now, how can we catch safe trades like that? Well, you can see here that the 15-minute structure with the same thing, swing. It's always going to be on the left, right? Swing structure, corrective pullback. Now, you see also another mess of lines in between. This could be a lower time frame like the 5-minute or the 1-minute time frame that is, showing all of this action. So on here, on each lower time frame, on each of these swings, this is going to be, let's say, corrective pullback, impulsive swing structure on the 1-minute, impulsive or corrective pullback, impulsive swing on the 1-minute, right? There's a lot of noise. Price is fractal. So whatever's happening on the 1-minute, the 5-minute, the 4-hour, all of those things, they're doing the same thing. They're building liquidity, they're taking liquidity, they're forming swing structure, they're doing corrective pullbacks, right? And so it's very clean and easy to, a lot of people get intimidated by price, and it's really not that complicated. So that's what I'm trying to do here, simplify this, right? Hopefully this video is good and it's not just a big mess. So this is the swing structure. 15-minute swing structure is bullish. We are not necessarily paying attention to the 4-hour so much, as the 4-hour takes a long time to develop, right? And because we know that we broke structure to the downside, we took and we formed a lower low. We've had a shift or a change of character at the bottom. And now we can see that price is very beautifully developing a corrective pullback, and we can see that we are now bullish on the 15-minute. So 15-minute swing structure and 4-hour swing structure is, the same as 5-minute swing structure and 1-minute swing structure. They're all valid on their own time frames, right? So in this case, because the 15 minutes bullish, right, I would wait to see for what? I would like to see a corrective pullback, right? And when I can see price shifting, which that'll be another video all about, the change of character and the shifts. The market structure video really goes well over that too. Once we see that price is shifting long, I would like to be what? Pro trend of the 15-minute corrective pullback. So if my target is this supply up here, right, based on my POI selection and refinement video that I also released, right, let's say you've marked out this 4-hour supply, you know that price will likely be reversing when it taps into this level. So what you're doing is you're targeting that high, and you are basically waiting for what? The lower time frame to be in alignment with the 15-minute bullish order flow. So in here you get a shift, and let's say here you're able to, on the 5-minute or 1-minute, you take, let's say, a buy from here. Once you break swing structure, bullish order flow is making higher highs, right? And what? Lower highs, higher lows, right? This low, we have a higher low. This low is higher low, right? Higher highs. This high is higher than that high. This high is higher than that high. Once we take out the high, we can expect a pullback. So what does that mean? If you're trading long here, then you would say, well, now that we've broken 15-minute, let's say, structure, right, I can expect probably a pullback. That might allow you to catch what? A secondary entry or a third entry, right? But at the same time, you are, from whatever level you entered from, you're targeting the higher time frame supply, right? So you might have taken a trade here, and let's say the supply is all the way up here, right? Just like in this example, supply is pretty high, right? You could continue to take trades like this every time that you finish a corrective pullback and get a signal that we're now shifting what? Pro trend 15-minute market structure. Pro trend on the 15-minute. Counter trend on the 4-hour, right? And so you're aware of that. You know that the 4-hour is bearish, so you expect to be very cautious, because at any moment, once we tap a valid unmitigated 4-hour supply, we likely can get a reversal. But it's going to be signaled by what? On the lower time frame, this is going to be what's happening, and I'm going to show you that, right? But every time we finish a corrective pullback and we get that shift, we are taking a new entry to ride to what? to that supply, or if you want to be safe, you take profit at what? At the break of structure, right? And it'll be a lot more clean than that in the application. I'm going to show you that, right? And then let's say if we focus now on, instead of the counter trend, let's say corrective pullback, right? That you're shifting, that you're trading. If you're trading on the 15-minute, this is pro trend 15-minute market structure, like I said, but counter trend 4-hour higher time frame, right? So this is a counter trend trade, right? Now to catch what? The reversal, to get continuation, look at this. This is what this area looks like. Notice this is the area where we tap the supply, and then what we get is a 15-minute break of structure, now indicating what? Bearish order flow is coming in. And in this case, we could be watching this on a 1-minute to 5-minute. So this is what's happening on this time frame. So on this time frame, we're looking at the 5-minute. So this is low, higher high. What is this? Higher low, higher high, higher low, higher high. What do we now form? When we break structure and we shift by taking out an area that what? This low formed a new high. Therefore, the expectation is that what? If we're bullish, what are we forming? We're making a higher low. So once we fail to make a higher low and we make a lower low, right? This low, and now this low is lower than that low. What do we have here? This is the first sign of bearish order flow flowing into the market. Potentially, what could we have? We could now have a shift, right? Now remember, same thing, swing structure and pullback. Swing's always going to be on the left. In this case, we are bullish, shifting bearish, right? The swing structure does what? Takes external range liquidity, right? The swing structure makes a new high, takes out a previous high, leaves a protected low, right? We get a corrective pullback, right? And then what do we get? Another swing structure to the upside, right? The swing structure, what? Takes external range liquidity, right? Forms a new high, right? And so when we fail to protect this low and we get a shift, now we can see that up here, this area is now where we have a strong order, a strong injection of sell orders, right? Because we were able to now breach areas that were previously going to be expected to be protected. So this is a sign of a change of character. We're now shifting bearish, right? Once we've done this, now this is a new swing structure because this one broke structure on the 5-minute. Now, you might be saying, well, okay, look, if the 4-hour is, let's say, bearish, the 15-minute is bullish, and now what? The 5-minute is bullish, shifting bearish. Well, what does that mean? Things have to happen on the lower time frame before they happen on the higher time frame. So if we are in a higher time frame supply, and we are currently now shifting 5-minute structure from what? From bullish to bearish, you can bet that maybe a 15-minute level could potentially be breached. When we see that, let's say this is the 15-minute level that is supposed to represent this area up here. Once we breach that 15-minute level, now what? The 15-minute now becomes bearish. And now what do we have? A pro-trend continuation swing. Because now we have what? The higher time frame is in alignment with the medium time frame. The 4-hour is bearish. The 15-minute now becomes bearish. And then what? The lower time frame, which is less relevant but is going to help you with execution, now is what? Bearish. So now what we can expect is we're about to leave a protected level that is not going to come back to be tapped until after potentially we shift, right? Because now the expectation is you can take a trade from here. Once you get that shift in order flow and we break the 15-minute, you can wait for price to come back, or you can take, let's say, a sell order like this, and that would be targeting what? It might look like that on the lower time frame, but on the higher time frame, this is what it's going to look like. You took a short from here, and you're riding price out until what? It breaks the swing low, right? And your target can be the swing low, or it can be the continuation to what? Because we're 4-hour bearish, maybe it's a daily demand zone that's all the way down here, right? And maybe you could be targeting all the way down here, right? Same kind of thing. When we're 15-minute, we're targeting for, let's say, for a counter trend on a corrective pullback, the 15-minute, right, to the higher time frame, we're targeting a higher time frame supply. Same thing, the 4-hour, let's say, could be bearish. We are targeting a daily or weekly demand, right? That's where we get our reversals from. So on the lower time frame, this is what it looks like. So this is the first sign of reversal and momentum shifting once we take out a protected level. An area that was a swing, this was the low that created a new high. Once we take out that swing low, right, with a new swing low, now we have what? This is now bearish order flow. This is now a break of structure to the downside and the first sign of potential reversal. Now what do we have? This is a 5-minute low, right? We break 5-minute lows. Now we're targeting the lows. Now we're making lower low and what? A lower high. Lower low, lower high, lower low, and this one happens to break what? 15-minute bullish, shifting bearish. Medium time frame confirmed is now bearish after this break of structure. That's where we get that shift, and that's how we know we're in alignment, right? So the idea behind that is, let's read this. Swing structure can be on any time frame. Good trading is understanding the power of each time frame. The higher time frame is always stronger than the lower time frames. How would we trade the current setup? So if the 4-hour was bearish, the 15-minute was bullish, and the 5-minute is shifting bearish. Well, we can wait for the 15-minute medium time frame to become bearish by breaking a protected strong low to catch the higher time frame, medium time frame alignment pro trend with an entry from a 1-minute to 5-minute unmitigated extreme or flip, right? So that's the whole idea behind this, right? So swing structure and internal structure or pullbacks, all of this, if you look to the left, that's always going to be your swing structure. It's always going to be the one that takes external range liquidity, right? Or that causes break of structure on the higher time frame. It's always going to be the one that forms the extremes. The pullback is always going to be very corrective. It's going to leave behind a lot of liquidity for the taking, right? And when you're trading this stuff, you have to remember that you can either choose to be pro-trend or counter-trend. And there's a strategy for both, right? You can trade the 15-minute time frame and be pro-trend 15-minute with a lower time frame execution, like a 1-minute to 5-minute entry, targeting a 15-minute level, but be aware of the higher time frame, right? Now let's get into a couple examples, right? So once again here, let's say we're on the 4-hour. If we were on the daily, this is what it looks like. So I'm trying to keep this as simple as possible, right? Let's pay attention to, if we look to the left here, when did we shift, right? So this area, this was a high, and we created what? A higher high. So if we're on a daily time frame, let's say that this one is what? This was a daily top, right? And so the expectation is what? That the area below here, this demand, is supposed to be strong, because this area was responsible for breaking structure to the upside. So the expectation is if price remains bullish, we should take out the current high, right? But what did we get? If we take out a protected level, this is the extreme, right? Remember, every time we create a swing leg, we have extremes, the swing low and the swing high. The expectation is we take out the swing high and continue the bullish trend. But once we take out what? The counter to that, which is a swing low. Now, what do we use for a signal of shifting in trend? For me, I use a candle body closure below the wick. So I don't know if I've covered this in other videos, but I use the wicks as guidance for the extreme, right? You see where I draw my extremes from the wicks. And I use candle body closures as confirmation in that break, as a break of structure confirmation. So a wick, a violation of a wick, I don't consider that a break of this structure until I get a candle body closure, let's say below. So at this moment, what did we have? The expectation was bullish, but what did we do? We ended up failing to take out the high, and we took out this protected low. Therefore, now we are doing what? Now we're breaking structure, so we could say, okay, now we're bearish. So what are we doing? Now we are attacking the lows and making new highs. So what area broke this low? Well, we could say this is the extreme, right? We could also say that this area is the high that broke structure. Because below that, what do we have? This was the low, this was the high, this broke structure to the downside. So we could say that this is a daily top, right? Because this is the area that, this is a new swing, right? So now what do we have? We have this swing high that technically is now going to be protected because we're now not breaching the highs, we're breaching the lows. And we currently have this new swing low, right? So what do we have here? This is a pullback. Now the expectation is because we're bearish until the low goes, right? Anything in here is internal, right? So if we break, let's say if we took out this high, or we took out this high, or we took out these highs, because those aren't extremes of the swing on this time frame, on the daily time frame, this is internal structure. Now on a 4-hour time frame, we might see a different kind of swing, so we might look at it a little bit differently, right? So once we get what? Once we get this new low formed, once we break and close below this level, what does that tell us? Well, now we have a new swing. What was the area that broke structure? It's going to be a swing. So now we have what? A new swing high, and we have a what? New swing low. This is the low. So this now is going to be the new extreme. So we have this high. The expectation is what? Bearish. So we wait to take out the low again. Once we take out the low again here, what do we see? Well, price came back up to do what? Mitigate the extreme here. And maybe it took some internal liquidity here. But because it didn't take out the extreme swing high, we're good, right? We took out the extreme swing low. So what does that tell us? Well, now we have what? A new high to be paying attention to. That's the new high swing. And then what? We have this new low. This low gets breached again, right? So what happens in here? This is all internal range liquidity until we break structure. That leaves us with what? Another swing. The swing high to the swing low, right? Now let's look for more clear examples here because those areas get a little messy now as they're too tight in here, right? But what do we see here? This was the low, right? Is the low going to be breached or the high, right? Because we're bearish currently, the expectation is we break the lows. So when we break this low, the expectation is what? That the high is going to be protected. What do we get? We actually took the low and then we took the high. And that's telling us what? That now we might be shifting bullish. So this is a change of character on a daily time frame. We've now shifted and taken out a protected high, right? The expectation was bearish. So now what we're seeing is, okay, now what we can expect is maybe we're going to be bullish. So if we're bullish, the extreme is going to be targeted and the low should not be violated, right? This area is supposed to be protected. We're just going to do dashed for that example, right? And so what do we have? External range liquidity is only at the top and at the bottom, responsible for breaking structure. This is the extreme low that broke structure to the upside. This is the point of reversal where we have the pullback. This is a corrective pullback. And what do we have? Continuation. Impulsive, right? This is a new swing structure. Once we take out swing structure, we have a new extreme, right? On both sides. We have the extreme low, right? This is the point at which we decided to break structure to the upside. This is basically where we reversed. So we have that swing low and we have the swing high, right? This is now a new leg. This is the impulsive swing. So anything that we take out in here, when price is breaking price lower and we take out these levels, this is all internal structure because it's all outside or it's all inside of the extremes. The only time that we are breaking swing structure is when we take out one of these levels, right? In this case, what happens? We don't take out the expectation, which is what? If we're currently bullish, the expectation is to take out this high. We already took out one high, we took out another high, right? 1, 2, we expect more, right? When we fail to do this one and we see what? The logo, now we can expect that we are shifting bearish again. That's a change of character. We broke swing structure to the downside. We took a protected level, right? And this is a new swing leg. This is now the high to the low. This is the new swing. And this one happens to be bearish, right? So now let's say we're trading in here, right? So if this is the swing, this high to this low, like this, what does that make this? This is basically a corrective pullback. And it's a corrective pullback until what? Until we get a reversal that breaks the swing structure. Because we're bearish, the expectation is to take out the low, right? So this is targeted. Whatever happens in price here, it should not take out this high, right? Now we have structure in here internally that we could violate, that we could break, and we're gonna go over that on the 15-minute right now. But what this basically is, right, and you can see that very clearly as I showed in the diagrams, this is now the corrective pullback, right? Let's look back at the example. We were bearish, so in this bearish, swing to the downside, corrective pullback, swing to the downside, corrective pullback, swing to the downside that breaks structure, same thing. Swing to the downside, break structure, corrective pullback, right? So in this case, once we take out this low or this low, what your expectation is, okay, now I could potentially be looking for a reversal. Now price could get a corrective pullback. So at this point, I'm taking profits from my short, right? Or at this point, what am I doing? Now I'm basically looking for counter trend trade long, right? So this is the 4-hour. Now let's look at it on the 15-minute time frame, right? Because we can be counter trend on the 15-minute, right? Now in alignment to take a good trade, because the 4-hour is bearish, I would rather take shorts when the 15-minute is also bearish. So now let's look at this. Remember what I showed you in my examples? Let's say if we look back here, what does this look like? This is the 4-hour, right? In this case, it's bearish. The corrective pullback, right? This is what 15-minute looks like. Look at what the reversal looks like, the shift on the lower time frame. This is going to be on any time frame that we look at. So here, right, when we were bullish, when did we get that shift to bearish, right? Let's look at 15-minute structure. So let's look for when, for the most recent legs here. We're taking highs here. So we're breaking highs. This high expectation is to go. This low is technically supposed to be protected. What do we have? Wicks pushing through, but we don't have candle body closure. So in this case, price is still bullish. Price is still bullish. But what do we fail to do? We failed to take out this high. So if we can see prices reversing, what do we have here? Break of structure to the downside. So now what that tells us is what? Currently in this area, price is what? 15-minute is bearish. This is potentially a sign that we could be shifting, right? But we might still have to do what? We still have what? This level to the left has not been taken out. Look at this. This is a swing high. And remember, the swing high and the swing low are the extremes. So what does this show us? Well, we seem to have missed that this was a complex pullback. A complex pullback is when we have price from the high to the low and we have these extremes, right? And what we fail to do is break either of those levels. So this is the extreme high, this is the extreme low so far, right? Check this out. Anything in here might be, let's say, swing structure on a lower time frame, but on the 15-minute, what this really is complex pullback, and it's all internal range liquidity, internal structure. All of this is internal because what? We did not take the high and we did not take the low extreme. So this is the extremes. This is the external, right? We can actually label this. I have it here. I'm just going to do this. I'm going to overlap it a little bit. So that is going to be external top. This is going to be external bottom. And that's why it's very important to pay attention to the legs. external range bottom, right? So anything in here is internal structure because we have not passed or broken any of these levels until what? Until this point, right? So anything in here, for example, this is what? An internal high. We broke internal structure here, and what does this tell us? Internally, we're shifting bullish, right? So the expectation is what? Take the highs. This is the internal high. We take this high, right? We get a pullback. The pullback should not breach what? This internal low, right? This is the internal high. We took internal range liquidity here. Now in a lower time frame, let's say the 5 minute or the 1 minute, whatever, this might be swing structure, but on this 15 minute, this is all internal. This is all inside of these extreme legs. And remember, we're bullish, right? If we look to the left, 4 hours bullish. The expectation is that the 15 minutes should continue bullish. In this case, we should go bullish, and look, internal liquidity, internal range liquidity is going bullish. So this is pro trend until it's not, right? This is internal. Now what do we have here? The expectation is what? To break this high again. This is internal range liquidity. And what do? In fact, before we do that, we made this new high, so this low should be protected. We what? We swept and broke internal range liquidity to the downside. And here we have candle body closure. So here the internal range is now signaling potential bearish order flow. So what does that mean? Maybe that means that these highs are going to be protected, and maybe the expectation is now that we get a corrective pullback, continuation to the downside. We get corrective pullback, continue to the downside, right? But we have to be aware of the higher time frame, and that's the whole idea behind this, right? So which goes first? The external range low or the external range high? We take out the high. So we're confirming what? Bullish. So where's the new low? Well, we have this low that broke the swing high, and then now we have what? This new high. So then we have new swing legs, right? So this is now the external swing low. And I hope this makes sense. I'm doing my best with this video for you guys. This is the external range liquidity up below. External range liquidity is above here. Expectation is bullish, so we should take out the high. But if we don't, that means that what? We're shifting, right? In this case, this is supposed to be protected because it's broke structure to the upside. This is a demand. We could get reactions to here, but if this reaction does what? Look, we could say, hey, look, this looks like it took out these levels, but all of this area here is what? This is internal range liquidity. Because the external swings, this extreme low and this extreme high, has not been taken. So anything in here that we take, this is internal. It could be minor, right? And that's what we would consider minor is. Minor is not major swing structure. It's anything inside here that causes a break of internal structure, right? This is what? Substructure. This low, we break. This is internal liquidity that we're taking. This is showing signaling bearish. But notice how we get a change of character here when we take out this high, that we're temporarily bullish. What are we doing here? This is pretty impulsive. Here we have some correction, and then what? We shift what? Now we've officially shift bearish. So if we look here, what do the trades look like? Now we're expecting to take out the lows. So here, what do we have? This low went, so this was what? This is a 15-minute low. We break structure downside. So every time we get pullbacks, we're now labeling the 15-minute levels here. See the 15-minute levels on this tool. What do we get? 15-minute bottom, right? What broke this? Technically, this is the swing. So here we have this high to this low. That's the swing. That's a bearish swing, right? So as long as we do not breach this high, we're safe, right? And because we're getting the pullback here, what happens? Price is corrective pullback, building liquidity, mitigating every previous level here, right? We tap what? A higher time frame supply. This area was what? Pushed down. Here we pulled back up. We swept some liquidity. This is what? A higher time frame, or in this case, the 15-minute supply level. We tap it. We break structure to the downside. So now what do we have? Well, now we have what? A new low, right? And technically, we could say that this could be the current high because this is the high in this swing. So we had this low, this was the high, 15-minute, and then this was the low, right? So we could say this is a swing. And we're going to draw this out properly. So this is a swing. What do we have here? Well, price is very aggressive with this, causes some sweep to the upside, and what does it do? Well, it basically comes in to tap this area here, which is what? Another supply that's unmitigated, right? Could even come up here. Price can continue to come to these higher levels and still be valid. But on the 15-minute, now what we have is a shift, right? But what do we have? The higher time frame, the 4-hour, is now bearish. And so what do we see here? Look at how much aggression we trade with on this time frame. Look at this. This is a very aggressive swing that does what? Takes out the low, right? We took out this 15-minute high, but realistically, what? We did not yet come into, let's say, good pricing. We have the swing high to the swing low. While we may have broken structure, in this case, candle closure below on the 15-minute, we didn't do so from a very clean level. So technically, I would have still expected price to come higher to mitigate a level above the 50% at least, right? Now, because it did that, doesn't matter. I could still, now that it broke structure, I still will label this. But the expectation is what? That we still continue bearish. So what do we have here? This was the low. We took out another low here. 15-minute. Here's the bottom. This is the new swing. The swing is always on the left, right? Bullish or bearish, swing is on the left, right? So now what am I expecting? I'm expecting the high to be protected because we broke structure here to the downside. This is where we broke structure. We took out this 15-minute structural leg, right? And now what I would like is I would prefer price. I would like to take shorts when price comes into what? Above the 50%, you know, so I might look for a supply in here, right, where I could possibly take shorts from. Now, what do we get before that? We get a break of structure here to the downside, and we make new lows. 15-minute, this is the tool. I need to get better at using this here. 15-minute bottom. We break structural candle closure here, right? So while you could say, well, how many pips is this, let's say? This is about 30 pips, right? So technically, a lot of people would say this is valid, right? And they'd say, okay, well, this is the new swing high, right, as we kept seeing. But what keeps happening? Look at this. We keep taking out swing highs that break structure. Well, that doesn't make sense, right? How are we going to catch any trades if we do that? Well, that's why it's very important to keep an eye on where price is coming from, right? The high to the low. You only want to take trades that make sense. In this case, for me, let's see, there's a tool here, 50% there. I would like to take something that's in premium pricing if I'm going short. And I go over that in my other video. So, you know, premium pricing, I want to take something from above the 50%. I'd be more comfortable, right? If it's from below here and it breaks structure downside, I might not be so interested because it's probably going to be weak. And just like that, we're going to take those levels, right? So even here, we broke structure downside, we're bearish, right? So we have what? This extreme high, and this is technically the extreme low swing. This is one swing structure, right? But what do? We get a change of character. We violate this, right? Look, the 15-minute top goes. When do we get the full candle body closure above? Right around here. So here you would start thinking, okay, maybe it's time to go bullish, right? What's the extreme low that caused that? Well, maybe this low broke structure to the upside, so maybe this is the low and this is the high. And you're like, okay, well, maybe now I might take price bullish, right? Maybe now price is bullish. We might get a pullback on the higher time frame, right? But on the 4 hour, we're bearish. So you know that while price could be moving with some aggression on the 15-minute, all it's doing is waiting till we get to a supply zone that could continue for lower pricing. So in this case, what do? We get a shift, a change of character. We break the highs on the 15-minute, but we tap a supply. That supply gives us what? The shift, right? Remember, that's what we're doing here. When we're counter trend trading, we're doing so until we get a higher time frame supply that's unmitigated, that's responsible for breaking structure. Once we get the sign of reversal, right? What do we have? A sign of reversal here. This low made a new high. When this low goes on the lower time frame, that's showing what? Bearish order flow. Maybe we take shorts from here now. That's what happens, right? So what's the swing structure here? Well, we have what? The external. We have this could be the external low. And we have this, let's see, we'll label it, right? External bottom. And the external top is here, right? And so until one of these goes, right, then we know where the swing is going, right? So when we break structure downside, now what do we have? Bearish order flow. This was a swing high. This might be the swing low. Maybe we get a pullback, right? What happens? When do we take out that low? This low goes here. Let's thicken that. The low goes here. What do we have now? A new high. Then what? When do we get a pullback? From this high, we really don't get any clean pullbacks. Maybe we could even go down here, right? So what's the expectation? That neither the high is not going to go until, because we're bearish, but once the low goes, then we get confirmation here again, right? Once this low goes, what do we have? Well, this was a swing, bearish. We'll mark that out properly. Like that. This should not breach the high because that's the expectation. Once we do what? We come into a higher time frame supply zone. Once we get a shift on the lower time frame, right? We might use the 5-minute or the 1-minute here, right? Let's look at that. Let's look at the 5-minute. What do the swings look like? What do we have? Here we're bullish. So what? We make a new 5-minute high, right? We pull back. We make a 5-minute high, break structure to the upside, we get pull back. That does what? We're protecting these levels that broke structure. These are the demands. That's the demand. This is the demand, right? This is the extreme of the pullback. Corrective pullback, the low, the break structure to the upside. So this is swing high, right? Corrective pullback. Here what do we have? The extreme, this demand, break structure to the upside, make a new high. Now what happens here? Well, price pulls back, taps the demand, mitigates it, breaks structure to the upside. The expectation is what? Continuation. But we're in a higher time frame supply. We failed to break structure to the upside. And now what do? Well, this was the area where what? This low broke structure to the upside. So this should be protected. But when this area goes, we now have what? A 5-minute bearish chalk. 5-minute change of character. Here we have this high broke this low, right? So we could say this swing, right? We have this, that was mitigated by this, mitigated by this. This one broke structure. So we could say this is a swing high. This is a swing low. The high should not be breached, right? Because what? The 4-hour is bearish. The 15-minute is in a 15-minute supply zone. On the 5-minute, we're getting that shift. So here we could say, okay, well, let's take a short now that we've shifted bearish from here, right? And I'm not really refining these levels too much because I'm just trying to prove a point here, right? We take a short from here because this should be protected. So if we come back up, we get triggered in, we break structure downside, you know, fail to break the high, right? We're continuing bearish, break structure downside. You know, you could take a trade from here. You want the short tool. Let's just say this. Look at how clean this is. What do we get? Continuing to break structure. This 5-minute level, this is the high, breaks the low. This technically should be protected. Right? And then how far can we take this trade? Right? Let's look now on the 15-minute. Now that we have our 5-minute entry, right? Remember the 4-hour is bearish, the 15-minute is bearish, and where's the 15-minute swing, right? Well, we have this swing high to the swing low. So the expectation is what? That the low is going to go. So we're targeting here, right? And so now let's watch what price does. Now, I mean, we're just trying to prove a point here, right? So I'm not necessarily like, this is in hindsight. You already know what's happening because we're bearish, right? What do we have? Once we get what? A break of structure, we can expect potentially a corrective pullback. But look at how beautiful this is. We don't get taken out of this trade. This is really clean, right? And in fact, we come back to mitigate again, it gives us another potential entry here. And so you have to understand what we are currently doing on that leg. Now, remember, if what happens? Well, the 4-hour is bearish. So what does this trade look like on the 4-hour? If we got a 15-minute entry, right, or if we got a refined entry to a 15-minute supply that broke structure to the downside and we're targeting what? 4-hour structure, look at this, right? So what's the expectation here, right? In this case, we were expecting to go bullish, right? But on the 15-minute, we already got a shift, so we're potentially targeting the extreme, right? If we get something like this, this is 37R, right? And in this case, obviously, we already know because it's in hindsight, it's already happened. So I'm just trying to give you the idea. I mean, if you caught an entire leg like this, that's like 70R. Now, that's crazy, right? Now, why did this happen, right? Because here, what do we have? We were currently bullish, right? So if we were bullish, why did we end up shifting? Well, let's look left. What do we have here? Let's go on the daily really quick. Because this, the 4-hour swing, is what? All it did was, this is internal liquidity. Let's look at this again. Right here, this is the area that we were focusing on. This leg was a high. This is the low, right? What happened to the left? This is swing structure. Higher time frame. Look at this. Now, you know, we could consider all these pullbacks and stuff like that, but aside from that, look at this. When do we have a clean pullback? We have that high and we have this low. So what was happening here is this was a swing and this was simply a corrective pullback. We came into what? A higher time frame supply, right? On a lower time frame, we got a change of character, right? What does that look like? Just like this, right? We were bearish. We were corrective on the 15-minute. Here we come into a higher time frame supply. We're getting a shift of order flow, right? To now what? To match the higher time frame. The daily is bearish, right? Even though the 4-hour was bullish and pretty strong bullish, if the daily was bearish, we know that, well, what might be happening now is simply just a pullback. Because unless this high is breached, right? Or let's say this low, everything in between here is internal structure of the daily, right? This is daily internal structure. This is daily internal structure. This is daily internal structure, and this one was respected, right? We reversed from the supply zone, and what did we do? This low is internal structure on the daily leg, right? This is all inside of the extremes. The extreme high, the extreme low. All of this is internal. Once we get confirmation by breaking, we have the new swing, right? This is now the new swing. And so now what happens is, until we take out what? This high, right? Or we took out this low, which is exactly what happened. We took out the low, right? Everything in between here is corrective pullback, right? So if the daily is bearish, well, the 4-hour could be a corrective pullback. The 15-minute could be a corrective pullback, right? On the bullish, giving temporary bullish order flow. But we know that we might align with the higher time frame. And when we align with the daily, look at how much power we bring in. This is pretty bearish. Look at how strong this move was. This is one swing leg. This is like 500 plus pips. That's insane, right? And so that's why it's very important to be aware of the higher time frame. So hopefully that this video gave you some ideas and some examples. I hope it wasn't too confusing. I really am just trying to simplify the structure here. So, you know, just a quick recap, right? External structure, what does it do? It takes external range liquidity, right? In this case, if we're bearish, it's the lower lows. If we are bullish, it takes the higher highs, right? Swing structure forms extremes. It results in breaks of structure, and it's the higher time frame trend. Now that trend can be on whatever time frame you're looking at, right? If your time frame is the 4-hour, yes, it's the higher time frame trend. If you are creating swings on the 15-minute time frame, like in this example, pro trend 15-minute is bullish, right? But it's counter to the higher time frame trend, right? Now, what are pullbacks? Pullbacks build manufacturer liquidity. They are counter trend to the higher time frame, but they allow for better pricing and allow for price to return to mitigations, right? What do we have here? When external structure is bearish, the shorts are going to be impulsive and the pullbacks will be corrective, right? When external structure is bullish, we have the longs are impulsive and the pullbacks, bearish pullbacks, are going to be very corrective, right? Easy to remember that external structure is always going to be on the left, internal structure is going to be on the right side, right? Just like this. We made a new low, right? Whatever happens in between that high, we're not saying high because we're bearish, but whatever happens in between the lower high and the lower low is all internal, right? Anything in here is internal, unless it takes the external swing and it makes a new leg. Then we have what? A new leg, a new swing leg, right? Same thing. Price is bullish, right? What do we have? The higher low and the higher high. This is going to be protected. The expectation is what? We're getting a corrective pullback. Anything that happens in here is fine. This is all internal structure, minor structure, until we breach one of the extremes, which in this case would be the higher high, right? Because we're bullish, right? Now the higher low is protected, right? And every time that we take swing structure, we break structure, major structure or swing structure, we can expect a corrective pullback. So that helps you to be more cautious when you're setting targets. Target the weak highs and take trades from protected levels, right? Your highest probability trades are always going to be pro trend when the higher time frame is in alignment with the medium and lower time frame, right? A tip: higher time frame is daily 4-hour, medium time frame is 15-minute, lower time frame is 1 minute to 5 minute. Counter trend is going to be when your higher time frame is not in alignment with medium time frame, right? In this case, this is the 4-hour. You can see that 4-hour is bullish. The swing leg break structure, corrective pullback, right? Then we have swing structure, then corrective pullback. Corrective pullback, in this case, if the 4-hour is bearish, the corrective pullback is going to be bullish, and it's only going to be until we have a valid unmitigated supply that is responsible for breaking structure, an area where we have enough liquidity, enough resting orders to tap to get continuation. Now, if you're trading the 15-minute, you know, with the higher time frame, knowing that the higher time frame is bearish, you know that 15-minute, your pro trend, you're going to be bullish, right, in this case. And what you're doing is you are counter trend until the 15-minute becomes in alignment with the higher time frame, right? The medium time frame aligns with the higher time frame. And what does that look like? You can get a shift, a sign of reversal, sign that momentum is shifting on the lower time frame, like the 1 minute to 5 minute. And you can see what this looks like inside of a higher time frame supply. Only at the higher time frame supply is when you're going to be paying attention to the reversal, right? So hopefully this gives you an idea of what pro trend is, what counter trend is, how to safely trade them, how to take account for protected levels and weak levels, and really what external structure and internal structure is all about. So let me know if you thought what you thought about this video. Hopefully it was helpful. If you have questions, just ask them, and if I have to make a part 2, I'll make a part 2. If not, I'll just answer your question as best as I can. Once again, if you want to join the Discord, the link's in the description. So catch you next time. Have a good night.